Today, we're joined by economist Nicholas Lardy, a prominent voice on matters of international economics and an expert on China's economic dynamics. In his recent article on foreign affairs, Nicholas Lardy challenged the prevailing view that China's economic growth is in a state of permanent decline. He argued that China's economy is more resilient than many believe, highlighting the crucial role of consumer spending and the service sector as major drivers of future growth. Hi, Nicholas. Thank you so much for joining us today.
Well, I'm looking forward to it.
So I've just read your article on foreign affairs, and you argue that China's economy is more resilient than many may believe. Could you please elaborate a little bit more on this? What key factors do you think will be important to sustain this resilience over the next few decades?
I think there's a good chance we're moving into an era where consumption will play a greater role in driving economic growth in China. That was certainly true in 2023. We had very strong consumption growth. The household savings rate was actually falling. And in the first quarter of 2024, we also had very strong consumption growth. If you look at a longer-term perspective, consumption as a share of GDP has been increasing every year since around 2010. And I think that's a reflection of the fact that, with the exception, obviously, of the COVID pandemic period. And I think increasingly that's a reflection of the shrinkage of the working age population. As the economy grows and the working age population is shrinking, wages tend to go up, and wages do drive consumption. And of course, that was very strong, particularly in 2023 and the first part of 2024. So maybe we're moving away from the traditional emphasis on investment driving economic growth.
I noticed that in your article, you refute the idea that Chinese consumer confidence is weak. Consumer confidence is highly associated with consumption. So what indicators should analysts focus on to better understand the trends in consumer behavior in China?
Well, I think the most important relationship is the relationship between the growth of disposable income of households on the one hand and the growth of consumption on the other hand. We normally expect when there's no consumer confidence, that means people are apprehensive about the future, and they expect the future maybe is going to be worse than the present. And when that happens, consumers typically start cutting their consumption and saving a larger share of their income. But what we saw in 2023 and in the first quarter of this year is that consumption is growing significantly more rapidly than disposable income. And that means consumers, households, are actually reducing the share of income that they're saving. The only way you can spend, your spending growth can outstrip your income growth is if you're cutting back a little bit on savings as a share of your income. So this is a fundamental contradiction. People's Bank publishes a survey that shows very weak consumer confidence. But I think the most important indicator of consumers' behavior shows that they're actually fairly confident. They're cutting back on their savings and they feel better about spending more.
Which industries or sectors are the consumers in China spending more of their savings or their income on?
Probably the most important growth area for consumption is services. Healthcare is a big item and grew very rapidly in 2023. I think there was a pent-up demand for healthcare services during the lockdown. Maybe people couldn't get medical appointments or medical procedures. So there's a bit of catch-up. So healthcare expenditures of households are growing at a double-digit rate. Now, there are other areas that are growing rapidly. There's a broad category that is referred to in the data as education, culture, and entertainment. That's also growing very rapidly.
In your article, you challenge the view that China's economic growth has permanently slowed. So what do you think are the most common misconceptions about China's economic conditions? And why do you think these views persist in international discussions?
Well, I think this idea that China is permanently slowing was advanced most forcefully last year by The Economist. That magazine pointed out that China's GDP as a share of US GDP declined by 10 percentage points in 2022 and 2023. But this decline was a function of two factors. First of all, the US GDP grew very rapidly because of high inflation. These comparisons always start out by looking at nominal GDP, and China's nominal GDP actually grew more slowly than real GDP because China had a little bit of deflation. The other thing that happened was that starting in March of 2022, the Federal Reserve in the United States started raising interest rates very considerably, and that led to capital outflow from China. Many global currencies weakened as the dollar became a more attractive asset. I don't think these two factors are going to continue. Inflation in the US is coming down, and I don't think the renminbi is going to depreciate by 10% every 2 years. So I think China's convergence in terms of absolute output towards the level of the United States will resume this year and is likely to continue in the short and medium term.
You just talked about the Federal Reserve's monetary policy, and I'd like to know how you foresee the future movements in interest rates impacting the economies of China and the US. At the beginning of 2024, the market consensus was that the Federal Reserve would cut interest rates probably 5 to 6 times this year. However, the expectation has been pushed back.
Yes, I think expectations on US interest rates have been in flux the last few months. There has been a very large gap between interest rates in China and the US. I think it's likely to diminish probably starting in the latter part of this year and continuing into 2025. That will give China a little bit more flexibility on monetary policy. They've cut interest rates a little bit, but not very much because they're worried about more capital outflow, weakening the currency, which is against their policy. So I think we're going to see some reduction in the large gap in interest rates between the two countries, and that will give the Chinese authorities a little bit more flexibility on monetary policy.
You also highlighted a significant shift in the landscape of private investment in China. So, what long-term impact may this shift from private to state-led investments have on China's global economic competitiveness?
Well, if you look at the long term, since reform began, the share of private investment grew extremely rapidly. It was teeny in 1978 or in the early 1980s. But by around 2012, 2013, private firms accounted for half of, more than half, actually something like 58% of all investment. Private investment generally tends to generate higher returns. And I think if you look at the estimates about total factor productivity, they were generally pretty positive up to around 2010, 12, 13. But after that time, private investment slowed down relative to state investment, and productivity growth slowed. So I think one of the lessons is if you want high productivity growth, you have to get into a situation in which private firms are the dominant source of investment growth.
So, what are the biggest challenges and opportunities you see for China in maintaining its role as a major contributor to global economic growth?
Well, obviously, there are a number of well-documented headwinds that many people have been focused on and writing about. And certainly in the short run, it's the adjustment in the property sector. I agree that that's a negative, but I think it's a very welcome negative because China had been overinvesting in property for many years, and the economy needs to transition to a situation in which property will still be important, but it won't be as important as it was 4, 5, 6 years ago. And other sources of growth need to emerge. And as I suggested earlier, one of the possibilities is a larger role for private consumption.
Considering these challenges, where do you think the greatest opportunities lie?
Well, I think there's still enormous opportunities in the service sector. China's service sector has expanded as its share of total output, but I think it has a long way to go. And obviously, as per capita incomes rise, we would expect a shift in consumption by households away from goods and towards services. And to some extent, we've already been seeing that. Vacations, travel, entertainment, these are the fast-growing areas, and they're likely to continue to be fast-growing areas. Another one is medical care. As people have higher incomes, they spend more of them in maintaining and improving their health situation. And that, of course, is reinforced in China's case because of the aging of the population. As people get older, the need for medical care goes up. So I think there are plenty of areas where demand is growing and will continue to grow.